The last few years have undoubtedly been quite difficult for global economies, and the need for financial advice is at an all-time high. Luckily for us, we are being advised by one of the best investors to ever walk the surface of the planet, Jim Rogers. But who is Jim Rogers? For those of you who don't know, Jim Rogers is an American investor and financial commentator, and currently the chairperson of Beeland Interests Incorporated. He gained prominence in the 1970s for creating the Quantum Fund and the Soros Management Fund, along with another entrepreneur, George Soros. Self-proclaimed as founding the Austrian School of Economic Thought, Rogers is also the inventor of the Rogers International Commodities Index. I mean, just look at his experience. Who better to give financial advice, right? But let's get back to the business in hand. How does one make millions in this current economy? While the Federal Reserve suggests increasing spending and smart wealth preservation to boom the economy, Rogers, on the other hand, decides to take a position quite opposite to the Fed. I mean, now we know why he labels himself as belonging to the Austrian school. Rogers suggests that it's actually investing in undervalued assets that will do the trick. And let's be honest, investing has always been a game of risk-taking. And in today's scenario, where central bank interventions and market manipulations play a key role, skepticism might just be the key to earning millions. And Jim Rogers has been vocally advocating against what the Fed has been doing. In an interview with Business Insider, Rogers said, "They, the Federal Reserve, have no clue what they're doing. They've driven the interest rates to the lowest in recorded history, and every other central bank in the world has followed them. Interest rates are negative in many parts of the world, as you know. This has never happened in recorded history, and it hasn't worked. And it's going to end very, very, very badly." So, what does Jim Rogers suggest instead? He advocates for the questioning of the status quo, and moreover a strategy that may come off as counterproductive: investing in cheap assets. Rogers' point of view originates from the basic economic principle that rising interest rates, which is a result of inflation, and the continuous printing of currency have inflated asset prices and to levels that could be considered unsustainable. Adding to this, the continuous intervention of central banks has not helped, but rather harmed the economy by distorting market dynamics. Think about it. Continuous intervention from anybody, be it the government or the central banks, would go against the economic principle of a free market. The changed dynamic of the market also means that traditional investments are now much riskier. How do we counter this? The answer is quite simple. It is necessary to identify the assets that are overlooked by the general public and hence are undervalued. On one hand, we have the Fed arguing for a downplayed inflation and boundless liquidity. And on the other hand, we have Jim Rogers, who raises his concern that the rosy narrative pushed forth by the Fed is actually veiling the real risks that are lying beneath the surface. And by blindly following the narrative set by the Fed, investors may actually be heading towards wealth erosion rather than wealth creation when the unavoidable tide change occurs. But hey, Rogers didn't just bring bad news. The good news: Rogers offers a solution to the problem he himself pointed out. Invest in cheap assets, or in other words, a classic bullish quality, buy low, sell high. Rogers suggests this be done on a global scale. And what exactly are the cheap assets that Rogers is talking about? Well, at the present point of time, he believes that the cheapest assets are commodities. In fact, Rogers has publicly claimed to own commodities, especially those in the agricultural sector. Again, Rogers isn't the first person to suggest this as well. In fact, a paraphrased version of what Benjamin Franklin said would translate to, "An investment in cheap assets pays the best interest." Again, he didn't use those exact words, but then he would agree to it, don't you think? To reiterate, Rogers' financial philosophy is quite simple: buy low, sell high. And the cheapest and best bargains available right now would be in commodities. Jim Rogers himself has been updating his portfolio with undervalued assets, mainly commodities, while preaching his mantra: don't just invest, invest smartly. Jim is openly and passionately into cheap assets. He has famously compared commodities to art, saying that commodities are the financial world's equivalent of a misunderstood artist, hated by many, but with infinite potential. It is like buying the most precious stones for the price of water. If that ain't a bargain, tell me what is. But as useful as they are, let's delve a little deeper into Rogers' philosophy, shall we? His philosophy, as informative as it is, also acts as a brain teaser, testing one's curiosity, especially when it comes to his views on agriculture. Today, the world is quickly moving to one which is more and more self-reliant. Investing in agriculture today would be the same as purchasing Bitcoin in the early 2010s. Rogers believes in the long run, and so he invests in what would be the cheapest agricultural product today, something that others would consider to be a foolish bet. But on the other hand, once the price of the stock inevitably increases in the future, you're in a safe spot, reaping the harvest that you had sown eons ago. Rogers also revealed that he has a soft spot for hard assets like silver, which is widely overlooked and hence undervalued, while the major focus lingers around gold. At present, silver is down more than 60% from its all-time high, and this is the same case with sugar as well. Yet Rogers did not say it out loud and explicit. He left subtle hints pointing towards the direction he himself would move in. Rogers is advocating for strategic maneuverings, taking into consideration all possible variables. Clever move, big guy. And personally for Rogers, investing in commodities, agriculture and silver are his hacks. But then what about the more mainstream investments? Technology, real estate, fast-moving consumer goods? Well, when Jim Rogers was asked this, he eloquently responded with, "Sure, go ahead, but remember the words bubble and burst are usually found together in the financial dictionary." For Rogers, the metaphorical glass is neither half full or half empty, but rather there exists a glass. That is, even when the world is swimming towards a financial calamity, Rogers is looking for opportunities, looking for the silver lining, or in his case, a commodity and agricultural lining to increase his personal wealth. While the general public follow Wall Street and jump into the bandwagon purchasing mainstream stocks to make quick money, Rogers on the other hand is looking for gold in the garbage. And most likely he'll end up finding it as well, as he often has. Rogers believes that the assets that are overlooked today might actually be the lifeboats when an inevitable financial crisis strikes. Rogers also promotes the purchasing of ETFs, while mentioning that it is always better to purchase indexes as compared to purchasing individual stocks. Before you think of Rogers as a sadist wishing impending doom, let me clear it up. Rogers is not predicting or wishing impending doom, but rather is just pointing out that there is a crisis coming up. In fact, it wouldn't be wrong to state that he is pointing it out at a time when the world still has time to change direction before colliding with the iceberg. He firmly believes that it will be commodities, agriculture, and fallen hard assets that protect the economy from inflation and ever-swaying market volatility. But why listen to Jim Rogers? Well, there always exists a possibility that he is wrong, but historical evidence suggests otherwise. Rogers has had an uncanny knack for predicting economic crises. He has repeatedly stated that the Fed is one of the most dangerous things when it comes to the financial world, and has warned that the worst is yet to come. And when a man of Rogers' stature, who has made fortunes by investing, studying and predicting the global financial markets, tells you that there is impending doom, I would rather follow his advice than take an unnecessary risk. And Rogers predicts that this impending doom will hit the world in 2024 or 25, in the form of a large-scale bearish market. And where does it all start? You guessed it, with a banking crisis. And if what Rogers predicts comes true, then it would make the 2008 global financial crisis seem like child's play. Rogers said that the 2008 crisis started due to increased debt, but since 2009, debt has only gone substantially higher year after year. This means that if a crisis were to hit us, then it would probably be the worst in the history of the world. Again, what Jim Rogers says matters, because more than just an investor, Rogers is also one of the premier financial observers and forecasters in the world. Paying heed to what he says might actually be the factor that helps you make millions by just investing. As Rogers said, don't just invest, invest smartly. You might consider adding commodities, agriculture, and silver to your portfolio. After all, it has been suggested by the financial Goliath himself. Well, that's it from our end. If you liked the video, don't forget to subscribe and share it with your friends. Until next time, bye-bye.